What is going on, everybody? In this video, we're providing you a state of the market and stock picks for April 21st, 2023. So that sounds like something you're interested in. Consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So we are starting to get some selling. Essentially, that 4,200 mark is our top. Wasn't expecting it to break, and then plus having the earnings of Tesla yesterday is really providing us insight into what is going on, especially with essentially Tesla's cash flow, and understand that next week we're going to get some other big hitters in the tech market, and that is going to be the true test. Yeah, Amazon, Apple have been essentially holding up tech. Tesla is starting to sell off. The rest of the market is looking about the same. We've been consolidating in this huge. Let me back this up a little bit. We've been consolidating for a very long time. It's been a very long, almost 2 years, where we just kind of just been sitting flat to this point. So, being said, we have played big ranges. I think we will continue to go sideways for at least the next couple months, and then we will eventually find a bottom. Ultimately, right now, we are starting to get recession numbers, and we are starting to hear a lot more people slowly easing into that recession talk. Now, this is something in how the media essentially does this. The administration does this. You just slowly get a drop of recession talks, and then they just all of a sudden start coming out with, by the way, we're in a recession, and then the market adjusts from there. And something I've been talking about, I think the market hasn't priced in a recession yet, and we're going to start seeing that. Now we got the second week in a row of more jobless claims coming in. And then going into next week. So tomorrow we also have options expiration. It's something I talk about, and essentially what these red dashed lines are every time. So about every month you have options expiration. It normally falls about the midway through the month. Just really depends on how things align, but nonetheless. Tomorrow's options expiration on top of everything. Again, there's been a lot of sell pressure, so I don't know if there's going to be covering tomorrow. That could cause a potential squeeze up tomorrow. It could be a strong possibility. We have to see, but nonetheless, we are going into another 2 big weeks coming up, and that's something we're kind of more gauged to tomorrow. There really isn't anything on the schedule tomorrow. We do have some. Global manufacturing PMI tomorrow. If those numbers are bad, that could start causing things to sell off. We do have Fed cook, but that's not till after market close tomorrow, and then we get into another big week of earnings next week, and that's something we have to look forward to, and what's to come, especially after getting Netflix, getting Tesla, getting a lot of the mid-sized banks. Of course, like it's something I've reiterated over this past week. Of course, your top 10 banks are going to do extremely well, especially your top 5 banks are going to do very well. And even some of the top 5 banks showing weakness. It's not a good sign. But ultimately understand that we are shifting into the next domino to drop. And so, like I said, we are in that final stage. That final stage being that we had the break. Something had to break. We started getting some bank breaks. Now we're in the final stage. Now we need to start pricing in the recession, which is the back half of everything. Then from that point, once the recession priced in, then we can pivot, then we can cut rates, then we can quantitative ease again. But until that happens, we're not going to go back to all-time highs. So we need this. We need this thing to play out, and so being said, this is also why we haven't really broken this range. And so the problem is right now the market's price action is showing it wants to sell, right? There hasn't really been a lot of news that's come out, but the market wants to sell, but we're right dead in the middle. Essentially the market's already made up its mind, right? Like earnings are bad enough, the market wants to start selling, but we still have Amazon, we still have a lot of big tech and big industry leaders that need to come out and give earnings first before we come into monetary policy. So, like I said, the next 2 weeks are going to be very critical. If we get more bad earnings next week from a lot of these big hitters, the market's going to start wanting to sell. And then if you come right back on top of it and have another 25-point basis move, plus the Fed saying or talking about mild recession, and we've already heard whispers of quote unquote mild recession, which is a big change from to a soft landing and no landing to a mild recession. Now, if there's any mention from Powell that we could see a mild recession, the market's going to go screaming down and price that in. So that is what is going to be key, since the Fed have been key to a lot of the different aspects that have essentially plagued us over the last year, because people were trying to time pivots, and so this thing just up and down all year. Now that we're actually seeing the data that points to recession, like I've said, essentially this whole time is we needed a bigger catalyst to start cutting rates. The bank breaks weren't enough, or else the Fed would have stopped. It's not enough just yet to cause disinflation. We need more banks. We need more small businesses to go under for that to happen, to cause disinflation. Again, this is all because we are based on this debt system that we currently have, right? And understand that for this thing to work, this is what sadly has to happen, right? You have to have big breaks and a lot of people losing their jobs, essentially liquidating all their savings, liquidating all their assets, to restart the clock, to normalize things and kill demand. This is the market we live in. And we didn't do it by choice, obviously, but sometimes, and don't want to get political about this thing, but nonetheless, I mean, that's the current system that we have, and so this is what we have to deal with as of right now. So with that being said, I think tomorrow, I don't think there's really we could get some more information tomorrow that could cause us to start selling off. Like I said, every day, every night, every minute, and every hour is going to matter, especially in a sensitive market like this, because we are waiting for that one piece of information that's going to be the information that starts selling us off, pricing in a recession, or perhaps even something worse than that, right? Like a black swan event could occur that could start causing this thing to start selling off heavily. Like I said, I believe if nonetheless, we'll at least go back down to the 3,800 once we get out of essentially the earnings cycle, which will be on the week of May 3rd. So about 2 weeks out from now, on that Friday, we'll have all the earnings we need to have to essentially know where the market needs to go from there. Like I said, the price action is already saying that it's made up its mind that the market is in bad shape and we need to start selling. But again, we are in the middle of earnings mode. The market will hold until it really determines what happens with Apple, Microsoft, a lot of these industry leaders, Boeing, all these to move to the next step. If that's selling off and pricing in recession, then we sell off and start pricing in a recession. But we'll see. I don't expect the market. The market, I said, would run up to 4,200 if it can't break it. I wasn't expecting it to break it because it didn't have. There wasn't a big enough catalyst, and this is where I talk about market sentiment. The market sentiment hasn't changed. The market sentiment is going to go back to all-time high because nothing's changed, and you still need more pain for the Fed to stop and start cutting rates. That's what the key indicator you really need to be watching is when the Fed are actually going to do that. Now, I know the market's been trying to price that in. But nothing has changed, right? If they're continuing to lay on rates, nothing has changed. So this is why we keep getting these nasty corrections, because people are like, no, it's just going to bounce right back. And it's not just going to bounce right back, right? Like, you need to have the recession part of this and normalization part of this. So that way prices are good, because you don't want the market to continue to push up in all items, that people want to purchase, right? If it's property or automobiles or invest in the stock market or whatever the case is, right? You have to understand that these prices are way too high and nobody can afford these. And so to make sure that, everybody can afford a house or some sort of car or whatever the case is, you need to normalize. So you need this whole system to reset. You need a hard reset. And that's essentially what we're going through, is a hard reset. So nonetheless, we'll see what happens tomorrow. If we do break below this 41.13, that next level, essentially the 40.73. If we break that, like I said, I think we're gonna go all the way down to the 3,800. There is support here, roughly around the 39 34. Typically, you go off of the nice round numbers and about 50-point increments or psychological numbers. But the market's been kind of in this weird, like, it finds these weird ranges that are like from uh, like three, for instance, essentially like the 3940 to the 4040 mark, or like the 100-point range. So it's not been like on the psychological numbers, which has been kind of weird. But I mean, every market is different, right? There's always similarities, but they're all always different. So with that being said, we will see what happens. And like I said, it's going to be very insightful over the next 2 weeks on what's going to happen. And like I said, I think we're going to have a united front on a recession come on May 3rd, and that would be enough. And then, like I said, that once that's priced in, it doesn't matter. I don't think at that point if there's a black swan event or anything like that, unless it's world ending. Ain't nothing going to change. I think at that point, once we've priced in a true recession, then we're good to go from there. And like I said, if we're going off of a technical wise, that would essentially be anything under the 3200 would be normalization, and then at that point, then we could start ripping up from there. But we'll see. Again, it's not saying that that can happen. We could just go back down and revisit roughly around that 3600. Very much a possibility too. But I think this is definitely going to test it. There are more layoffs even today. Amazon announced more layoffs. There's a lot more layoffs coming. So again, we'll see what happens. And in Europe is in really bad shape. You have to understand that, and they're continuing to pour on rates. Their system just can't take it, and understand that it affects us just as much because again, they hold a lot of bonds. So we'll see what happens there. Bitcoin again, starting to, it's breaking back down. That 30K, I've talked about this. So it's dead cat bounce. We'll see how this thing plays out. If you want it to hold, it needs to hold the 27K mark. If not, the things are just coming back down to the 24K mark. And if it breaks that, which I think it will be, then you're going back down to the 16 and then the 12, 10, and 8. Um, but again, we'll see. We'll see what happens moving forward. Again, I'm still very much a believer in crypto, and it also helps spread out that wealth, right? And have other investments not outside of our current financial system. I think is important. Again, not financial advice, but I think moving forward, especially with what we're going through right now, it's still going to be a slow process. None of this is a fast process. Even the BRICS thing, that's why I'm not too concerned, because none of that's going to be a fast process, right? Like it's still, you still have too much people that do trade in the dollar for that to change overnight. So that's not saying we definitely need to do something about it, but even that being said, it's going to be a slow transition. So we'll see what happens there. Gold, as of right now, it's still holding that higher level. It does need to break out the 195 if you want this to be. If you start pricing in a recession, you're going to really start seeing this thing start to skyrocket. It's normally gold. Everything's going to always default back to gold. It doesn't matter. Nonetheless, if you are looking at a recession or world-ending type of scenarios where people are extremely fearful, right? And understand that we've been extreme greed as of right now, and that's a huge indicator that you should be potentially taking profits. Again, on financial advice, but that's currently where we're sitting at. So we'll see what happens there. As far as Tesla is concerned, like I said, after earnings, it's just been getting absolutely obliterated. We'll see if it can hold the 164 tomorrow. If not, get a huge gap fill here down to the 141 mark. And this, like I said, you got this huge gap fill I've been talking about for a while. It's going to fill that. My first buy will be around here. Like I said, we'll continue to buy at levels on the way down. If this thing wants to really start getting nasty, again, we don't really know how much of a dive this, even if you're pricing in a recession, will we see new lows? It's hard to tell. But when you're talking about normalization, I think that really hasn't occurred yet, right? And you're going to need, again, massive pain to get to that normalization, and that could potentially happen with a bunch of banks failing and a bunch of small businesses failing. Would do the trick to cause so much disinflation that you would get a massive push down. You have to understand we are at historical levels. Every day is almost a historic. You're living through a historical time every moment is very historical because you've printed 40% of the money supply. That's never happened. So you're getting much bigger moves than you typically would. And so you can't take that, you can't think that it's just going to be a small correction and we can pull straight out of here. I do believe it would be a fast recovery, but it would also entail that we start printing money again. You can't do that until something happens first, right? You can't just randomly start printing money. To say that they haven't done that for the banks anyway, but you can't just randomly do that without a bigger rate because it's going to cause more inflation. So the best thing to do is break a bunch of banks. Just a bunch of money goes away, right? And understand that if the banks fail and people losing money, and then a bunch of money is just coming out of the system because right, people are defaulting on loans and delinquencies. They're going higher. People are skipping meals, right? Like, you just can't ignore this stuff. It's just not going to go away, and it's not something that you can just bounce right out of this. Like, this needs to happen first, and then once a full break happens, then you recover from that point. So Tesla in bad shape. We'll see what the rest of them, how Apple and Google and all them do. Next week, I'll get more in a deeper dive or the weekly update, as we'll talk about that and what's in the upcoming earnings and for next week. So again, will be very interesting next week. And Apple, we have slotted here for the fifth. So we got the week after for Apple. Let's look at some of these here. Google's not even listed yet. Yes, we're gonna have Amazon next week. That's going to be interesting. So we got Amazon a week from today. That will be interesting there. They have some of these bigger ones kind of spaced out a little bit, which is really kind of interesting here. You also have Google or Microsoft, excuse me, next week. So big one there. You also have Enphase. You got big energy play next week. BA. You got BA next week. So you're still trying to separate them, if you notice, because a lot of times we did have a lot of these bigger tech all hitting in one week, and now they're kind of spreading it out and getting a taste of a little bit of everything, so you don't get a huge collapse overnight. So you got BA, Microsoft, you got Amazon next week. So those are some heavy hitters going into next week. BA has nothing changed here. It's just chopping, waiting for the market. Again, once everything starts looking the same again, you need to be prepared for a big move. And like I said, this consolidation that we've been doing, and that's what's concerning in my aspect, is when you look on the general index, SPX, there's been a lot of consolidation over this big range. We're talking like 200-300 point range, and the market's just been playing over a year and a half, just up and down, consolidating. Imagine the move that is going to come out of that. That's going to be a huge move. The 300 points move in consolidation. Just imagine how big that's going to be. I'll flip back to the general index. Let's take a look at and again, this gap will be filled eventually. JPM rejected again off that top range. We'll see if this comes back down. If it can hold the 135, if it does break that, expect this to come down. Again, I expect this to be down at this level, at least at the 109 at some point. Again, the only reason it popped was because of the earnings and doing so well, obviously, because of the bank runs. It wasn't just because it was JPM. There's no way JPM would have hit those numbers without the massive amount of scare and bank running that's been going on. GS just kind of flat. Bank of America just kind of flat. It's actually starting to sell off more now, so waiting to see what happens there. Let's pop back to the general index. So this consolidation is what I've been talking about, and you can see it better when you start going to the higher time frames. This is a massive consolidation all within this area right here. There's a big move about ready to happen, and I believe it's going to be to the downside to normalize everything and then potentially rip up. In my opinion, I don't think it's going to be just a V shape, going to hit this and then wick out of here and then V shape. No, I think you'll hit this. I think it'll be a very small amount of time we're going to be sitting in here, like we have this wick here. Because I remember when this happened in the pandemic. This was obviously this was in a month, so within a month, we hit rock bottom here. It was a massive, crazy drop. I remember this was limit down, limit down, limit down, and then within a month you've wicked back up, and then you started pushing up. I'm imagining this move potentially happening here. This could be a very historic move. So if you essentially took these two, um, I don't know if I can even do that on here, but if I could just like magically like, yep, that's about right. That monthly move would put us right into normalization, and then we wick out of there and wick halfway back up to the 33, and then start slowly grinding up. I think that's a very much a strong possibility. I think we're going to see the same exact move right here, which is exactly what that is. I'm not saying it's going to be exact when it comes into this. I think anything if we do start hitting down fast, again, you have to remember when this started happening, particularly this move, was we had limit downs like every day for like I want to say like every couple weeks for this whole month. It was just limit downs. So it was like one week you'd get a limit down, the next week you get two limit downs, and it wasn't as bad the next week, and then all of a sudden you get one more limit down. That's pretty much how that month went, and I'm pretty sure that's what we're going to get here. Going to get some limit downs. This was actually 2 month candle, so we could potentially start getting that. So maybe we get our first candle down to the 3,800, down to 3,500, 3,800, and the next candle would be that final limit down, limit down into the 3,200, or yeah, into the 3,200, and then we start making our way back up. Again, I think it's very much a strong possibility. Just be mindful that this would correct this, right? Like we really haven't. I mean, if you, like I've said, even if you hit 50% of that move, you hit 50% mark on essentially on this move here. But like I said, normalization is right here. This is fair value down here. Like I stated before, this is why this is highlighted a different color, because this is actually fair value. And if you want the market to be back in fair value, you need to sell to here. That would be the pain that would cause everything that we talked about here to actually happen. So we'll see how that goes. But like I said, that could be very much a possibility. I think we could start getting at, especially recession and lots of layoffs. And the one thing that could make that happen is more bank failures, a lot of small business losses, and that would happen. So just be mindful that that's in my opinion, that's again a very strong possibility of something can happen. We could start pushing back up. If we hit 50%, that's good enough. Let's just start pushing back up. We'll see. Time will definitely tell. But again, I think we have one last downward move before this thing fully recovers. And again, the market will recover way before the actual economy does. So, again, we'll see. So if you made it this far, go ahead and drop a like button. Until next time, I'll see you guys.